Zuber and Company, fire forensic experts and forensic engineers. Seeking answers from ashes. Seeking answers.
Imagine this. You build a successful business from the ground up. You pour everything into it. And then one day, you watch it all go up in flames. Well, that's exactly what happened to a company called Ponni Agro Industries, a really successful mango pulp manufacturer. But you know what? The fire, that was just the beginning of their nightmare. This is the incredible story of that disaster, a denied insurance claim and a 16-year legal battle that, believe it or not, all came down to a single piece of paper.
So first off, let's just set the stage here. Ponni Agro wasn't some tiny, struggling company. I mean, look at these numbers. Their financials leading up to this whole incident show a profitable, growing business. They were a seasonal industry, right? So they'd produce these huge quantities of mango pulp from May to July, employing hundreds of people. They had everything to lose.
And their struggle? Wow, it was anything but brief. This wasn't some quick dispute that got settled in a few months. From the day of the fire in February 2010, it took nearly 16 years to get a final answer. An entire generation of a business was basically spent just fighting to survive. Let's break down exactly what happened. Okay, so picture this. It's the night of February 10th, 2010. The workers have all gone home, and a fire, which they later figured out was from an electrical short circuit, breaks out. It just raged through the night, completely destroying these temporary storage sheds, and with them, millions of rupees worth of mango pulp cans. The company's future was literally turning to ash.
But here's the thing. Ponni Agro was insured. They had two comprehensive standard fire and special perils policies, one for their stock and one for the building and machinery. They thought they'd done everything right, so why, after all this devastation, was their claim just flat out rejected? That's the central mystery we're going to unravel today.
It took 2 long years of waiting, but in May 2012, the official letter finally arrived. The insurer, Bajaj Allianz, repudiated, or, denied, the claim entirely. Just like that, Ponni Agro was left to face these massive losses all on their own. And to understand why, we have to look at the case the insurance company built against them.
And it was a pretty compelling case. The insurer and their surveyor, a company called MS Asawa & Co., they presented two really powerful arguments that, on the surface, made this look like a complete open and shut case against Ponni Agro.
The first argument was all about the construction of the buildings. The surveyor pointed out that most of the damage happened in these sheds that weren't permanent brick-and-mortar structures. And this distinction, it turned out to be absolutely critical.
So in insurance speak, you've got puka construction, which is your sturdy, permanent building. And then you have kucha construction, which is more like temporary structures made of stuff like thatched leaves. And that's what Ponni Agro's destroyed sheds were. The insurer argued the policy was only ever meant to cover the permanent puka buildings.
And they didn't just pull this out of thin air. They pointed directly to the fine print, a specific construction warranty right there in the policy. It explicitly defined kucha construction and, they argued, excluded it from coverage. So, if the stock was stored in a kucha shed, it wasn't covered. Simple as that. A clear violation of the warranty.
But they didn't stop there. Their second argument was maybe even more powerful. And this is where it gets into some really fascinating accounting. The surveyor looked at Ponni Agro's books and came to a pretty stunning conclusion. The stock that actually burned might not have even belonged to them.
Okay, so stick with me here. The surveyor did the math. They took the stock Ponni Agro had at the beginning of the financial year, added everything they produced, and then subtracted everything they sold. From that total, they subtracted the undamaged cans that were safe in the puka godowns and also subtracted the cans they were just storing for other companies. And the result? Ponni Agro should have had negative 19,081 cans of their own in that shed, a mathematical impossibility, right?
And this led them to a really crucial legal concept, insurable interest. Basically, you can only insure something if its loss would cause you a direct financial hit. The surveyor's math suggested that since the stock numbers just didn't add up, the destroyed cans must have belonged to someone else. And if that's true, Ponni Agro had no insurable interest.
So, there you have it. The insurer had what looked like a rock-solid case, a clear violation of the construction warranty and this mathematical calculation that seemed to prove the claimant didn't even own the stock that burned. It really looked like the end of the road for Ponni Agro, but it wasn't.
Because in the years-long legal battle that followed, A single question from the court would completely unravel the insurer's entire case, and it revealed a document that had been overlooked this whole time. A document that, well, it changed everything.
The court, which was the National Consumer Disputes Redressal Commission, wanted to see the original proposal forms, the documents that were filled out when the insurance was first requested. They wanted to go right back to the very beginning of the agreement.
So the insurer complied, but only partially. They produced the proposal form for the stock policy, but they failed to produce the original proposal for the building policy, the very policy that covered the structures themselves. And this failure to produce a key document, it raised a huge red flag for the court.
And this is where the story takes a truly stunning turn. While digging through mountains of paperwork, Ponni Agro's lawyers found the smoking gun. And unbelievably, it was hidden in a document filed by the insurance company itself as part of their own evidence. A little document labeled Annexure 2.
This was the whole ballgame. Annexure 2, which was part of the building policy schedule, explicitly stated that Kucha constructions were in fact a covered risk. The insurer's main argument that the policy excluded these temporary sheds was completely contradicted by their own files. It was an incredible find.
Well, with this new evidence in hand, the court had everything it needed to deliver its final verdict. And this final section really shows you just how powerful proper paperwork can be. The court's logic was just devastatingly clear. First, the insurer's failure to produce that building proposal form, that was held against them. Second, Annexure 2 proved Kucha constructions were covered, and that a specific, separate premium had even been charged for it. This made the general exclusion clause totally irrelevant, and because the original surveyor's report completely missed this crucial fact, the court basically said it was not creditworthy.
And so the final verdict was in. The court ruled that the insurance company's denial of the claim could not be sustained. After more than a decade of fighting, Ponni Agro had finally won.
So what was really at stake here financially? Well, even though the surveyor recommended denying the claim, their own report had assessed the net loss for just the stock at nearly 6.7 million rupees. That number really highlights the real-world impact at the very heart of this long legal saga.
Just think about that for a second. A 16-year ordeal, a business pushed to the absolute brink, millions of rupees on the line, and it all came down to a single annexure, one page in a policy schedule that was almost completely missed.
And that brings us to the final, crucial takeaway from this incredible story. It kind of forces us to ask a simple question of ourselves, doesn't it? When was the last time you actually read the fine print on your own insurance policies? Because as Ponni Agro Industries discovered, sometimes the fight for survival isn't won in the ashes, but in the archives.